Hi there, Mike Brady with Generosity Wealth Management, a comprehensive, full-service financial services firm headquartered here in Boulder, Colorado. Recording this the first week of October, and we now have 3/4 of 2023 under our belt. Frankly, it was great until about 2 weeks ago, 3 weeks ago, when we really started to give up much of the gain that we had made in July. July was a good month. And then August was kind of a muted month, and September has not been good. And so far, this first week of October has not been good as well. You know, it's important for us to remember it's our time frame. Are we down from where we were in July? Yes. Are we up from where we were at the beginning of the year? The answer is yes. And from a year ago, 12 months ago, we're actually dramatically up. Are we down from where we were at the beginning of 2022, which is pretty much the high, about January 3rd of 2022 for the unmanaged stock market index, the S&P 500? The answer is yes. But when we go back out, that's about a year, almost 2 years ago. When we go out 3 years, 4 years, 5 years, 10 years, are we dramatically up? The answer is yes on the unmanaged stock market indexes, whether it's the Dow, whether it's the S&P, etc. So that's why we kind of look at it. People are like, oh my gosh, it's down. The answer is yes, it depends on your time frame. And it's important for us to always keep the proper time frame. Is it down for the week and for the month? Yes. Down for the quarter? Yes, maybe. But then we're looking at years, year, 2 years, 5 years, and then even 10 years. So if you need the money in a short term, it's absolutely relevant. But as we get a longer and farther time horizon, the less the gyrations, on a daily, weekly, and monthly basis have meaning to you. And unfortunately, we have a 24/7 news cycle, so it is important for them to excite your emotions on a daily basis. So daily, if not hourly. So up on the screen, I've put the S&P 500, which is an unmanaged stock market index, and you're going to see I put an arrow next to the "You are here," and that's where we are. The Dow Jones, which is not reflected on this chart, is another unmanaged stock market index. It's actually turned negative for the year. The S&P is positive for the year. Dow is slightly negative. The second chart are annual returns and intra-year declines. You're going to see that that year-to-date number right there is positive for the S&P 500. The red numbers are during the year how much is given up from a top to the bottom within the year. So it's called an intra-year decline. It is normal. You look at all those red numbers down there, you'll see that it's normal for there to be ups and downs within the year. So when it happens, let's not freak out. It's normal. It's always difficult as a human being to not extrapolate out. If everything's going up, you feel it's going to go up forever. If it goes down, you feel it's going to go down forever. We look for patterns. I mean, look at the clouds in the sky, and we're looking for little puppies and other things in the clouds when really there's nothing like that. So we see patterns, but we can't create patterns that might not be there. I think the big thing to watch out for is the Fed. I'm pretty irritated at the Fed. I'm by no means the only person. They waited too long to do something until they woke up some morning in the beginning of 2022 and said, oh, we should do something. And then they overreacted all through 2022, in my humble opinion. Everyone's got an opinion. And people always say in hindsight, it's 2020. Well, go back and look at all the videos. While it was happening, I was saying, and many others saying, this is just way too much of an overreaction. You should not try to shove in 1 year, which is 2022, all the interest rate increases that you should have done over a longer time horizon. That has a huge impact on the economy, and then of course on the subsequent bond markets and stock markets as well. My concern is that they're going to wait too long in order to reverse that trend. Right now they're in a holding pattern. Up on the screen you're going to see what the expectations are. I've kind of put a circle around it. There's an expectation that it might go up just a little bit more. but then it will decline. And so the most recent, in my opinion, again, decline is due to the expectation they would start that reversal immediately. And now they're in a holding pattern saying, no, we're not going to do something. We're not going to do anything at this point. So, that's frustrating. That's irritating, especially when we look at the unmanaged bond indexes. They have been impacted because the pricing of bonds is dependent upon the interest rates that are out there. And that's, until the interest rates are reversed, bonds are going to stay suppressed and perhaps even stay, go down, which is what's happened most recently because people had an expectation of lower interest rates, which really hasn't happened. And this also has an impact, of course, for any of you who have a house that you're trying to sell or a house you're trying to buy. Any real estate is frustratingly very expensive. I mean, a mortgage at 3% is a lot cheaper than a mortgage at 7.5% or 8%. And so that has a real crippling effect on the number of transactions, the price of the properties, the inventory, things of that nature. And, this is not just for home residential properties, as we're talking commercials as well, loans, home equity loans, commercial and business loans. And so that's a real dampening impact on the economy, which has me concerned. So, they've said that, if everything's a priority, nothing's a priority. If everything's important, nothing's important. Okay, so it's good to know what you should really be focused on. And in my opinion, it is the impact of the Fed, both on our the bond portion of a portfolio, but also the impact, the spillover into the stock portion, the equity portion of the portfolio as well. So it's very frustrating. What can you and I do about the Fed interest rate? Nothing. Okay, that's outside of our control. There is but it's not meaning that we're completely powerless. Okay, so let's talk about that. I was talking with a good friend of mine the other day, and we had this realization of two different views of the world. He has a tendency to kind of look from a global point of view. He would love to sit here and talk for 15 to 30 minutes about the Ukraine and the Russian, whether we should provide more aid or less aid, or just really kind of talking about these global issues, which is fun and interesting over a cup of coffee. However, I'm less interested in that because whether he and I agree or disagree or we solve the problem, nobody cares what Mike Brady thinks. I'm not going to impact that, or if I do, it's going to be very minimal by the people that I might elect into Congress, which then will make a Congress or the president or political office, who then will make the decision. Instead, many of you may or may not know, but I went to Ukraine in August to help out. I'm a treasurer of the board for an international adoption and hosting organization. And there, I helped out with 300 kids who are stuck in Kiev and in the central and eastern Ukraine. They came over to western Ukraine, and I was able to help them deal with their trauma. It was only a week, but it made a huge impact as we had this camp, this youth camp Say Yes, we call it. That was very impactful. Can I impact the big global? The answer is no. But what I can wrap my hands around, my mind around, is that there are some kids who have some trauma that need some assistance, that I can provide some of that support. When I take that same philosophy to finances and to wealth management, it's, can I impact the Fed? No, I can't. What I can do is keep my emotions in check. I can make sure that long term my portfolio is the appropriate percentage of both the equity portion and the stock, the right balance in my portfolio. I can keep track of those other aspects that can derail me from my long-term financial plan. I mean, there's lots of decisions that I can make to kind of shore up what I believe will increase my probability of meeting my financial goals and reaching those goals long term. And so I think that having that long-term vision, I think that understanding what it is that I can control and impact, make sure that I'm as solid as I can as I go through the future, which is always inherently unknown. We have to remember that there's always government politics and government craziness. At least in my 54 years, it's always been a part of that. But what I can do is to know those things that I can control and try to do the best in order to be prepared for all that. So anyway, Mike Brady, Generosity Wealth Management. We've got one more quarter in 2023. Let's hope the Fed, cooperates with us. But if they don't, let's keep our eyes on the long term goal. 303-747-6455. Thank you.